Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Welcome back to India Fintech Diaries, the podcast that brings you insights from the heart of India's thriving fintech ecosystem. I'm your host, Elroy, and today we're exploring a crucial sector of economy, micro, small, and medium enterprises or MSMEs. MSMEs play a pivotal role in India's vision of Viksit Bharat or developed India. And today we are discussing how fintech innovation is driving growth, enabling access to finance, and overcoming the challenges that MSMEs face.
And I'm your host, Hemant. Joining me today is Pallavi Shrivastava, co founder of Progcap, a leading fintech that has been making significant strides in empowering MSMEs. Pallavi has extensive experience in SME financing and has worked with organizations like the World Bank Group. So we are excited to hear her perspectives on the future of MSMEs in India. Pallavi, welcome to the show.
Thank you for having me. It's a pleasure being here.
Awesome. So, Pallavi, before we jump into the deeper conversation around fintech and MSMEs, let's start with a quick introduction to yourself. And also, you can give our listeners an overview of what Progcap does and what inspired you to found Progcap.
Sure. So I come from a banking family, and as far as I remember, most of the family members, including my father, uncles, everybody was into banking. And growing up, I saw banking from very close quarters, also appreciating the importance of credit in helping one shift the orbit, whether it is an individual or a business. But back then, banking looked very different. And it was definitely not a career choice I ever planned on having. Fast forward to 2017, here I was setting up a fintech company and looking to see how we can disrupt the banking as we know it, especially when it comes to access to credit. In terms of the chronological order, I completed my engineering and then worked in a software company for close to 2 years and then went on to do my MBA from XLRI Jamshedpur. So I started my career with Hinduja Group right after my MBA, and there I worked across the various group companies, right from a manufacturing giant to a lubricants company, and then moving on to the banking and financial services, and working across marketing, finance, business development, and sales really gave a flavor of various aspects of running and growing a business. I always wanted to start something, and I got really interested in the microfinance industry back in 2009-10. And in 2010, I quit my job to join a local microfinance institution in Mumbai. Then worked with the on in consulting and development sector with a bunch of organizations, and that led me to join the World Bank and IFC, which is a private sector arm of the bank, where I spent close to 5 years working in the space of financial inclusion for last mile SMEs, both in India and different markets in South Asia as well as East Africa. Across these markets, I think one thing was coming out very clear that SMEs, while a huge driver for growth of an economy, the credit was a complete white space, right? Access to credit was something which needed a lot of work. Estimates say that this is even now is about $500 billion plus of credit demand that remains unaddressed in India alone. And I think that was a large enough challenge and an opportunity to really solve for it and create a large scale impact. So that was really the genesis and driver for me to start Procap.
Pallavi, the vision of Viksit Bharat, the developed India, has been a key goal for the government, with MSMEs being seen as one of the primary drivers or pillars for this transformation. Could you share thoughts on the role that MSMEs play in shaping this vision of the government and why strengthening them is essential for India's economic future?
Absolutely. I think our government has set a very ambitious vision to transform the country into self sufficient, inclusive, and globally competitive by 2047, which is marking 100 years of independence. And I think if that if that goal has to be met, the requirement is to really grow the GDP by 9x in the next 2 decades or so. That's a
Right.
very, very ambitious growth, right? MSMEs contribute, as we know, to 30% of the GDP, 45% to the exports. And if we compare this with the global benchmarks, most of the developed economies, MSME contribution is over 50%, right? And that's the goal that our
Correct.
government has also set up, that how we can take this MSME contribution to India's GDP to over 50% and export to over 75% in the coming years. And where, as you think about that, we cannot achieve that ambitious goal by excluding MSMEs. So MSMEs clearly are going to be the next frontier. And when I say MSMEs, I really would like to add, that these have to be tech enabled MSMEs, right? And
Right.
as we think about future ready micro and small enterprises, we need not only to work on credit, but also work on how they can be digitized, they can have access to affordable credit, and also export linkages and connections with global markets. So there is a lot of work to be done as we think about elevating India to a $30 trillion economy, and having it inclusive with enhanced quality of life for everyone, right? So that's a job to be done. But at the same time, I think we need to also think about how we really look at MSME credit gap, right? Or at least in our experience, what we have understood is that when we speak of MSMEs, these are not a homogeneous group, right?
Correct.
MSMEs are diverse in nature, they are heterogeneous, and therefore we cannot use the same brush to paint them all, right? So we got to have a very customized, flexible, segmented approach to solving for scale up of MSMEs. Second aspect of it is going to be that, and which I personally have been strongly advocating and working towards, is inclusion of women MSME customers, right? And how we can have
Right.
more women get included. So I think if we have to achieve the vision of Viksit Bharat, looking at SMEs, especially micro enterprises, which form the 90% of this gap, is something that we need to really, really focus on, along with also seeing how we can have more women participation and have very customized credit offerings to include more women and micro enterprises into the fore.
Pallavi, as you rightly pointed out, MSMEs actually account for 45% of exports. And to be more precise, the 10 million registered as MSMEs in India today employ about 7.5 crore people and generate about 36% of our manufacturing. But yet, historically, they face challenges in accessing formal finance. Over the last few years, fintech has been instrumental in bridging this gap. But let's take a little walk back down memory lane and look at how MSMEs' access to finance has evolved over the years. And how do you see fintech driving this transformation of MSMEs, especially in areas around access to finance and digitization?
Largely over the last decade or so, MSMEs have been excluded from the formal financing ecosystem, right? Even today, we
Right,
speak about more than 90% SMEs don't have access to formal credit. And that presents a vast challenge as well as a very large opportunity for players who really can solve it and create large scale viable businesses, right? There are two sides of the problem. One is from the supply perspective, which we all know that banks find it very difficult to underwrite these customers given the lack of data, lack of formalization, need for extensive documentation, need for collateral, because that's how the traditional credit has worked, and also the huge servicing cost as we think about tier 2, tier 3 towns and below, right?
right,
What needs to be looked at, which has been ignored largely, and because of which credit remains a massive gap, is the demand side of the problem. And over the last 7, 8 years of our work, we've clearly understood that, as when we say SME credit, it is not a credit problem. It is actually a business problem. And our thesis here is that, we need to have a holistic approach to solve it. We cannot just provide credit. We got to really work on ensuring that the money comes back. There is good repayment behavior. There is good financial discipline, partly done by education, partly done by incentivization. But at the same time, a large part has to be solved through understanding how these businesses work, right? So one of the pain points for these for MSMEs is just like look at the payment delays, for example, right? Now
Right.
there is a MSME Samadhan portal, which is met with some amount of success, not yet there in terms of resolving their payment delays issues, right? Second could be the logistics problem, right? So sourcing raw materials, just supply chain delays, right? There are other market factors when it comes to slowdown, global slowdowns that affect. So I think we cannot look at solving MSME credit unless we think about these problems in a holistic way and come up with customized product offerings. Traditionally, we've been talking about giving credit, and I think that's not only applies to SMEs, but for individuals also, but largely MSMEs, because 99% of them have a very different cash flow. They don't have these cycles of payment and credit. It's spread out through the month, right?
Right.
The segment that we work in, which is the segment that we chose to work in to begin with, which is a trading economy, trading segment, the retailers, distributors, that's about a third of the 63 million MSMEs in the country. There, the retailers have an informal credit option available through a distributor, right? So they will go and say,
Right.
okay, I can buy today, but I can pay once I have made the sale, and then I will make the payments, right? There is no real penalty for credit delays, right? There's no CIBIL reporting happening. There is no sort of disincentive for them to delay the payments to their suppliers. But the moment we come to formal financing, right, they have to now get into a financial discipline. They need to make their payments in time. So the way we are approaching this is that when we get in, we don't want to make any big changes in the way they run their businesses, right? So I'll give an example. When we were starting
Yeah.
in 2017 and we were meeting customers, and here we were, my co-founder and I, really traveling the remotest locations in the country, meeting a large number of retailers and distributors. The interesting insight that we got was that 8 out of 10 customers we would meet would be taking informal credit, did not even own a credit card, had a CIBIL of -1. When we would reach out and ask them to access credit, they would mostly say no. And what we learned over time is that they are not saying no to credit, but they are saying no to switching the behavior from informal way of working to formal way of working, right? So we wanted to, in our product, to actually bridge this gap and really see how these customers can actually continue with the way they are functioning without making too much change in their payment terms, in their supply chains, and then embed credit on top of it. So our product therefore requires them to make flexible payments, part payments, draw down limits as they want, and repay when they are able to realize. This is basically the cash flow based model, where both in terms
Yeah.
of underwriting, we look at cash flow data to make underwriting decisions, and then we try to converge the product as and mirror it as per the trade terms without disrupting too much of their existing way of doing the business. That really helps to penetrate and scale up, and helps the MSMEs to run their businesses smoothly while also getting the benefits of formal credit.
So, Pallavi, also government from their own side is trying everything which it can to support the MSME sector, and that continues in the Union Budget of 2025. Several initiatives have been announced aimed at MSMEs, including the revamped credit guarantee scheme. Can you elaborate on some of these budget introduction and how they will impact the MSMEs?
Yeah, absolutely. I think the biggest for us has been the higher limit on priority sector classification.
Right.
So MSMEs now have 2.5x limit on investment and 2x on turnover, and that's a big one because there is more number of MSMEs that can now draw benefit from that. Credit guarantee cover, like you said, is of course one important one, and the customized credit card. I think that's another big one, which will allow a large number of MSMEs to get access to credit, especially micro enterprises. All of these initiatives are geared towards, of course, enhancing better access to credit for SMEs, strengthening their contribution to the overall economic growth. I think what one thing which is really missing in the entire scheme is the focus of how NBFCs and fintechs can leverage some of that, and how this can actually translate into priority sector lending classification and sort of benefits for the fintechs and NBFCs which are facilitating this credit, right? So that's an area I think that that will really aid a lot of fintechs and NBFCs which are trying to do tech enabled credit and digitizing the MSMEs to actually make them future ready for accessing credit as well as competing in the global markets, really drive those benefits and make use of it to increase credit facilitation in the till the last mile. I think just simple measures like we don't at least see at our end any kind of reduction in cost of funds because of the PSL classification. I think if those measures can also be introduced, that will really go a long way in enabling more access to credit by the private sector players to SMEs.
Well, we completely aligned on that the PSL categorization would help NBFCs and fintechs who are accessing fund from the banks at least to reduce the cost of funds, and that benefit can be passed on to the customer and help them access financing at a more affordable rates, which will attract them. Absolutely. And Pallavi, if you look back in the last couple of years, the biggest thing on MSME, other than the initiatives government has been taking, has been this advent of innovations in digital finance. And from digital lending to supply chain financing, we have seen many solutions emerging from not only fintechs but even from the banks, because they've started competing with the fintechs and driving innovation. So can you help us understand the fintech innovation that are making tangible difference for MSMEs, especially in the tier 2, tier 3, where tier 1 was never that big a problem, but 2 and 3, some of the innovation that are making a lot of difference?
Right. So we operate largely in tier two, tier three towns. That's the market for us, right? We have hardly any customers in the large metro cities. One of the things that we have understood over time, and I think partly I have already shared that, is the understanding of the trade terms, the cash flows of these
Yep.
businesses when we design credit products, right? And therefore, if you see cash flow based underwriting, supply chain financing, embedded credit are the real innovations which are going to drive credit in the last mile. Just coupling this with the digital public infrastructure, we have now account aggregator framework. We're looking at OKEN. I think some of these will also drive more credit to the tier two, tier three towns of India and really achieve access to credit to the for the last mile. I think one of the things that we are really, really seeing has worked well as we think about supply chains is the embedded finance, which is really becoming the default gateway, uh, very seamlessly integrating financial services with platforms, right from e-commerce to B2B transactions and the offline supply chains as well, right? I think this will really eliminate the need for too much of in-person interaction, standalone credit applications, and they will allow businesses, especially the micro enterprises, to access funding at the point of need with limited friction and a much faster disbursement. So that's one. I think the second one is understanding the importance of cash flow data, right? For us, one
Right.
of the key data points for us is the data residing on the ERPs of the brands, right? So we work with anchor partners, large corporates, with their distributors and retailers. They've been sort of transacting even before formal credit has come into play, right? So a lot of historical transactions data that is residing with the brands, with the distributors, is something that is really gives a proxy of how these customers will behave when it comes to formal credit. So having access to some of that ledger data, which talks about how the repayment pattern has been, what is the promptness of payment for the buyer, whether he's a seasonal buyer or a regular buyer. Some of these data points really help us to arrive at a good credit behavior proxy. This is also kind of largely now being replaced and becoming even more stronger with the GST data. When we were
Right.
starting out, GST was just coming into play, so we were not very sure about the veracity of the data that's coming to us from the ERPs, right? But as we saw over the last 3 to 4 years now, GST has made a lot of data formal. So that kind of triangulation between data coming from the ERPs to actually GST and then the bank statements really help us to arrive at to a large degree of certainty on the credit worthiness of a borrower. So I think cash flow based underwriting will be a driving force as we think about scaling up SME credit access in the last mile. And I think the area where we are working, right, supply chain financing is already emerging as a critical sort of product and enabler for for unlocking working capital that is tied up in the receivables and unpaid invoices of the brands and distributor and retailer ecosystem, and also on the supplier side. So I think some of the digital platforms that are, including ours plus a lot of other companies which are driving platform based lending, facilitating
Right.
real time disbursals, and using cash flow based lending is something that's going to be really helpful in when it comes to scaling up access to credit.
So, Pallavi, while these fintech innovations actually help scale up access to credit, what do you think are some of the challenges that MSMEs might face in adopting these innovations, especially around risk management and financial literacy?
I think financial literacy is a critical aspect, right? We
Right.
cannot just give credit and forget, because in the end we need to understand that we are all in the business of also collecting money, right? The
Correct.
more we align credit akin to the payments product, right? So because these
Right.
SMEs are constantly buying, selling, there's receivables, there are payables. So embedding credit and making it as close to their payment behavior is something that's going to make the adoption easier, right? So like I said, right, there is a resistance to formal credit, because from the customer's perspective, I don't understand, right? You will spoil my CIBIL, you
Yeah.
will make me you will charge me exorbitantly, there is lack of transparency for me, I don't understand, and hey, I get credit from my distributor. So how do you break through all of this is by building more trust. That's one, right? Explaining how the product works, how you can use technology. If you, let's say, have a mobile app, and
Yeah.
also keeping your charges very, very transparent, right?
Right.
And so, like in our case, right, we have an entire team working on constantly on the call center, advising customers on how to really access the app, how to upload documents, how to make repayments in time. So our collection process starts as soon as disbursement happens, because they are making sale every day. So we are constantly encouraging them to repay whatever amount they have. This will help them to reduce their burden on the interest costs, etc. So there's a lot of work to be done on capacity building when it comes to last mile enterprises, micro enterprises. We can't just leave it at disbursing money. We have to, hold the hand and take it through to understand how the product works, how payment should happen, how we can inculcate good repayment behavior. I think that's going to be a large part of it. And then building trust, right? And trust can be built by how transparent you are in your charges, how you're actually sort of solving the pain points when it comes to a grievance, how strong a grievance redressal mechanism you have in place. I think some of these things go a long way in building trust, right? We started recently a series, what we call a Samvad, where we come
Yeah.
up with our customers. We do monthly series of getting on either in person or getting on a Zoom call with our customers, where they come, they share their challenges. Our leadership team goes and visits these markets and spends time in actually not only talking about Progcap as a business, but also driving financial literacy among all other aspects of running a business, for example. So I think if we think about anybody who's trying to solve for MSME credit, will need to build for some of these initiatives and costs, and a lot of capacity building initiatives, uh, along with the profitability and other agenda that you drive forward. One more thing I would like to add is, we've already heard the budget and
Yeah.
how MSME Pro it has been. There has to be a lot of focus coming from collaboration between banks, fintechs, policymakers to come together and solve this at scale, right? Because as we think about this large scale gap, it cannot just be done by government policy interventions or credit
Correct.
guarantees. I think it needs a lot more cross sector collaboration, which will then actually ensure that financing is not no longer a barrier, but actually a catalyst for growth for MSMEs.
So, Pallavi, you spoke about some of the challenges that MSMEs face while trying to access finance. Can you also highlight how Progcap helps solve some of these challenges?
So we basically started with a very simple idea, and the thought was that how we can create a model that can bridge these gaps and do this at scale, keeping the portfolio quality intact, right?
Right.
And so we took all the insights that we gathered during our conversations and field visits. So essentially what we did is, we took all these insights and created an industry first model that we call as faster rotation credit line, which allows for mirroring the exact trade terms that reside between the brand, distributor, and retailer, and
Okay.
offer flexible, customized, collateral free credit, and where the customers can draw down and repay as per their own terms, right?
Right.
This meant two things, that, one, there is end use monitoring, and there is no scope for diversion of funds, because what we do is we effectively onboard the brand, distributors, and retailers on a common platform
Okay.
wherein the trading data is shared. And as soon as the shopkeeper buys goods from the wholesaler, we fund the transaction and we pass the proceeds to the distributors, right?
Right.
And then we encourage them, like I mentioned, to make part payments as they kind of realize sales, right? So this is where the brand partnerships come into picture. They allow us to reach a large number of customers. We don't have to go customer by customer to onboard them, and they also allow for controls, right? So we lean on the partnerships to make sure that the portfolio quality is intact, and effectively the overall the model is built in a way that there are controls at all levels, as well as strong value proposition for every entity, right? So now effectively we have a platform where on one side
Okay.
we have the anchor brand, the wholesalers, retailers, trading data is shared, and using their data we make underwriting decisions, we create a score. And then, on the other side we have the banking partners, which include large NBFCs and private sector and public sector banks, with whom we co-lend to the last mile retailers, right? So that's how the platform kind of works. By virtue of providing credit, I think our entry point is effectively digitizing the supply chains. On top
Right.
of it, we can then offer credit, right? So yeah, we take a lot of pride in saying that we have kind of pioneered and created this space to some extent. And today, we are the largest players in retailer financing space. We've disbursed close to 40,000 crores overall so far, and doing this at the back of very strong portfolio quality.
So, Pallavi, there's a lot of optimism around MSMEs being a key engine for India's growth in the future. So, what is your outlook for the next 5 to 10 years in terms of MSME growth? And maybe we should spend a little bit of time understanding what you think would be the end state, say, 10 years later, if we were to achieve everything that we were to achieve as far as enabling credit access to MSMEs is concerned. What would then be the credit access journey for an MSME 10 years later?
Like I said, I think tech enabled MSMEs
Right.
is the next frontier, right? And I think we are seeing how fast technology is evolving. However, we work in offline distribution space, right? We are actually looking at supply chains which are more informal offline, right?
Yeah.
So there we see that, there is still a huge gap when it comes to technology adoption. And to your point, they're also scared of adopting technology. They don't know where to start, right?
Right.
10 years down the line, we clearly see that there is a huge drive and push towards digitizing MSMEs, digitizing there's these supply chains altogether, right? We are building a B2B SaaS product called as Procom, which is basically ensuring that, end-to-end digitization, right from order placement to inventory management, and then repayments and embedded credit on top of it, where we see the future lies for MSMEs, right? So think of it. Today, I'm a shop owner. I get up in the morning, I check my app. I see, okay, what are my receivables? I just make a few clicks, a few phone calls, and then the orders are placed. I'm able to make payments, and I can see my receivables and sort of opt for credit. I think that's the journey we are talking about, right? And end-to-end digitized supply chains, not only within India but also global supply chains, right?
Right.
And credit then being a feature and not an outsider, product that is helping MSMEs outside of their supply chains, but it just sort of embedded in their day-to-day workings and supply chains. That's the journey. I don't know if it's a 10-year agenda or a 20-year agenda, but I think the focus on digital first, technology driven, with credit and payments seamlessly working across the supply chains, both domestic and cross border, will be the vision. And that's when we can say that we really truly achieve the agenda of financial inclusion for MSMEs, both in terms of credit and also digitization.
Got it. And I'm a very optimistic person. I hope it turns out to be just a 5 year agenda,
Yes.
and we go to go in that direction. So that brings us to the end of today's episode. Pallavi, thank you for sharing your insights on the MSME sector and its critical role in building a developed India. The journey towards Viksit Bharat is one that requires collaboration, innovation, and a deep understanding of the challenges MSMEs face. And it's clear that fintech has a pivotal role to play. Thanks again, Pallavi.
Thank you so much, guys.
That's it from India FinTech Diaries this week. Do log on to our website, indiafintechdiaries.com, for show notes and other exclusive content. If you enjoyed this episode, do not forget to subscribe and stay tuned for more discussions on the latest in fintech. Until next time, stay safe.